Coming up today, stocks broke out to new all-time highs. How much further can it keep going? Unemployment rises to 4.1%. There's a rate cut just around the corner. Biden says he's not leaving. The media's reaction, along with betting markets. Tesla keeps ripping. Gold breaks out. Bitcoin gets slammed. I get you prepped for next week. And my new stock pick service and $1 million challenge has just kicked off. Let's go, guys. Hey, what's up, Click Capital community? Thanks for joining me here today for the last daily market review this week. And I've got an interesting one for you today. So stick with me right through to the end, and I'm going to get you all up to scratch on everything that's happening across financial markets, where I'll try and inform, educate, and entertain you all along the way. So big thanks to everyone who supports this channel by hitting that like button, and let's get stuck right in. Market screaming up to a brand new all-time high. S&P 500, 5567. On a 3 white soldiers candlestick formation. Once again being led by mega cap tech. Composite chart up 2.6% today, while we're still seeing a bit of softness in small caps and mid caps, along with pretty soft overall market breadth as well. Still got more than half of all stocks underneath the 50-day, and once again more new lows on the Nasdaq versus new highs. Volatility still really low, 12.4 on the VIX. Big move today in short dated bonds. There's a 2-year. Going down to 460. On the back of that weak jobs data, all of which I'll come back to really soon. High yield bonds climbing back up. The dollar taking a bit of a tumble with those bond yields as well. And like I said on Wednesday, Bitcoin was looking a bit heavy back then. Actually fell sharply yesterday, 4th of July. We'll take another look at cryptos later on in this video, as we will do with gold as well, which put in a good day. I'll also be covering Tesla on today's video, which has had a huge bounce back pretty much out of nowhere. Just ripped up, covered all that lost ground from the start of the year. And so it's true, this is a really tough market to be a bear in. Prices just keep going up and up and up, even in the face of some soft economic data. Just these big companies pulling the indices higher, and once again, the buy the dip strategy continues to power on. But before I get into the rest of the daily market review, I'm super excited to announce my new stock pick service and $1 million challenge is now live and open. I've created a brand new trading account where I'll be making weekly contributions with the goal of hitting $1 million in under 10 years, with a target average return needed of about 18% to hit that goal. And I'll be doing it all out in the open, 100% transparency, sending all my picks and exit alerts to my members before I make the trade inside my account, and all details posted to a private members area. And so far so good. Thanks to my first stock pick, Palantir, which is up a bit over 17%. Since I started the position, it's helping the portfolio right out the gate. And I know it's still very, very early days, but so far so good. Time weighted return 4.9%, simple return 3.5%. As I've just updated the performance page in the members area, you can see exactly how the account's tracking with screenshots of all my trades posted in there as well. And I'll be giving out my next pick to paid members this Sunday morning, 8 AM New York time. Pick number 5. Really excited to share with you guys what stock I'm going to be buying next this coming Monday, like I'll be doing every Monday. And a big welcome to everybody who's already joined, as I opened up the doors for early access yesterday to anybody who was on my email list. And so if you're interested in learning more about this and want to join this journey with me, then click the link below this video or head on over to my website, clickcapital.io, and you can read all about it there. And I've got 2 plans, a yearly plan, which is $440 a year, actually works out to be less than $37 a month, which you'll find is very competitive. Or you can get a lifetime plan for less than the cost of 2 years. However, the good news is for the next couple of days, I'm offering a 40% discount as part of the launch. So in checkout, just click on apply coupon and enter the coupon STOCK40. Click on apply, and then you'll only pay $462 for lifetime access. That's with no ongoing costs, and you can follow me on this journey the whole way through, because I'm not going to stop until I turn this new account into $1 million US. With the help of weekly dollar cost averaging, good stock picks, and careful portfolio construction and management. And so I'm really excited to launch this journey and challenge with you guys. Going to be putting it all out there in the open, and we'll go through the ups and downs together that we're bound to encounter, as there will be a few peaks to scale and a few valleys to traverse. Investing's not always easy, but I'm going to do my best to grow this new account into $1 million and demonstrate what disciplined wealth building looks like in real time for anybody who wants to follow along. So if you're interested in that and taking advantage of this special, click the link below this video and head on over to my website, clickcapital.io. And the most popular plan has been lifetime access with the coupon code STOCK40, and you'll get instant access into the private members area and be added to the mailing list to get my next stock pick this coming Sunday morning. Okay, back into the daily market review. And before I move on quickly to the latest in the presidential race, Tesla, gold, and Bitcoin, first let me just get you up to date on the latest data from the US economy. And being the first Friday of the month, we get a look at the jobs market for the month before in June. New jobs came in at 206,000, a bit above expectations, but still definitely no breakout looking at data over the past year. What is breaking out though is the unemployment rate. now at 4.1%. That came in a little hotter than expected, which was 4%. And we're seeing the average hourly earnings year over year change start to soften a bit as well, coming in at 3.86% for June. And this is a big key input for inflation. Big driver of inflation is people's wages. People are making more money, they can spend more money. And so wage growth is pulling back a little bit. And just looking at daily credit card spending, year over year change. Latest data we've got, entertainment and transport still really hot. Furniture the weakest, along with home improvement, online electronics, but still online retail and total card debit pretty much keeping up with inflation, as these are not inflation adjusted, but still nonetheless bigger than last year. So for now, the consumer's still mostly holding up, but there are signs of cracks and softening. And we haven't quite triggered the SARM rule yet. Looking at the difference between the 3-month moving average of the unemployment rate and the lowest of the 3-month average from the previous 12 months. When that goes above 0.5, that triggers the Claudia SARM rule, a respected economist. And looking back in history, when that happens for the first time in a while, meaning it hasn't happened recently, most of the time, recession's just around the corner. So we're definitely creeping in that direction. And I'm going to stick to my view that there's a good chance we do see a recession next year. And we'll be looking for more signs of this in order to adapt and prepare our portfolios for what seems like almost inevitable. Otherwise, this time would truly be historically wrong for indicators like the SARM rule, the inverted bond yield curve, amongst a few others as well. And the trend is they're revising these jobs numbers down. When people have forgotten about it, we all get fixated on the headline print, and then down the track, they just revise the numbers down, like we can see in this bar chart here. Looking at non-farm payrolls, the latest numbers in the dark blue, but as first reported in the light blue. You can see with the revisions, especially for May and April, significantly lower than what was first reported. So the jobs market is softening, the unemployment is rising, and we're kind of on the cusp of triggering those recession signals, but there's still some more confirmation that is needed. But I think it's fair to say we're closer to the bottom in unemployment rate than we are to a top. And global central banks have already started to move. They're increasing their cuts, easing monetary policy, and in fact, for the month of June, it was the first time since October 2020 where we didn't see any global central banks increase their rates. Looks to have bottomed out, and we've now got an increase in the amount of cutting. Having already seen Switzerland, Canada, and the Eurozone, notable developed economies, cut in recent months. Wouldn't be foolish to think the Fed could be just around the corner either. And since Jay Powell was pretty much saying he's waiting for a softening in the unemployment rate, and something I've been saying for a few months now as well, once we get a print above 4.1, 4.2, maybe 4.3, I think that's the green light Jay Powell needs to go ahead for a rate cut. And certainly looking at the price action in bond yields today, they are suggesting that a cut could just be around the corner, seeing that 2-year take a bit of a dive. And the chart pattern's actually quite bearish. Looks like an elongated head and shoulders formation, these peaks and dive back in. And I think it'd be fair to say we may have just taken out some support here today, that the market's previously bounced off 470, cut clean through. I'm also looking at Fed fund futures, now approaching almost 80% chance we're going to get a cut in September. They meet on the 31st of this month. Market currently pricing in less than 10% chance they'll cut then, and they're actually pricing in another good chance of a cut in December as well, which I think is reasonable to expect. They like to go on a consistent path, and so they may start cutting 25 basis points every quarter, and as always, just play it as it goes. And that could be what's really helping mega cap tech do well here. You could kind of think of large tech as long duration assets, sensitive to interest rates. They're priced for growth, and interest rates play a big factor in a lot of the valuation models institutions and hedge funds use. And so basically low rates is just a license to print money, especially for these big companies like Apple. They can sell bonds super cheap, get away with ultra low yields, and reinvest that back into new businesses at a much higher clip. And arbitrage the cost of capital and their return on it for investors. Give them more cash to buy back shares and kind of just rinse and repeat. And after a sharp fall in long-dated treasuries TLT to start the week, done a pretty quick snapback and recovery above the 50-day VWAP here in the orange. So I'll be keeping an eye on this one. And my hunch and feeling is, unless we get any real inflation surprises in the next month or so, which the markets aren't pricing in, I think Jay Powell will go ahead and cut rates in September. And moving on to the most interesting, relevant, and definitely entertaining story I'm covering for you guys this year on the Click Capital channel is the US presidential election race. Something I enjoy following every 4 years, and this one is a doozy. To get you up to speed on the latest, after a big fallout from his debate with Trump, in which has largely been seen as a total shambles, a lot of people, even from the Democratic Party and donors, calling for him to step down, said he's not going anywhere. He's going to go down swinging. In fact, he even said, "I'll beat Donald Trump and I'll beat him again in 2020, and which I think he meant to say 2024. And that wasn't his worst recent gaffe. He was actually on a radio show and said he was the first president that got elected statewide in the state of Delaware when I was a kid. He also said he's proud to be the first black woman who served with a black president. So I think we've kind of gone past the embarrassing stage. It's now kind of almost disturbing. The world's most powerful man speaking absolute gibberish, with even CNN reporting that Biden's telling the Democrat governors he needs more sleep and plans to stop scheduling events after 8 p.m. as apparently his debate night was just a one-off episode, he said. He's not normally like that. So it's kind of a bit scary, isn't it? Who's really running the United States of America? Who's really been responsible for the approximate 12 million in illegal immigrants that have crossed the US southern border under Biden's watch? And what exactly is their objective with that? And one thing's for sure, mainstream media has done a pretty good job at trying to bait us all into identity warfare based on our race or sexuality, when none of all that really matters. We should all be judged on our character and actions, regardless of how we're born. But it's funny, isn't it, how they diverted our attention when there was a class warfare kickoff back in 2010, 2011. Occupy Wall Street, after the fallout from the GFC. The media was covering that quite a lot. Then all of a sudden, there was a sharp pivot. Around that same time, 2011, 2012, when Occupy Wall Street kicked off, the percent of all words used in media coverage, systemic, structural, institutional racism, racial inequality, disparity, inequity, all skyrocketed at the same time Occupy Wall Street kicked off. Pretty funny coincidence, isn't it? Because in my opinion, they're trying to bait us and keep us occupied in an identity warfare when it's really class warfare they're worried about, the wealth inequality gap. Because in my opinion, and I think a lot of Americans would agree with this, the founding fathers wouldn't be too happy if they got a glimpse into what was happening today, and especially how old most of the political leaders are. At ages where a lot of people go into nursing homes, I think a lot of people would be surprised to know how young the founding fathers were. Some of them were 18, in their 20s. Thomas Jefferson, who authored the Declaration of Independence, was only 33. George Washington was 44, and Benjamin Franklin was the oldest at 70 years old. And these guys broke away from the British rule, stood on their own 2 feet, fought the American Revolution. Funny enough, their biggest grievance was over taxation from the British. They fought them on it for 8 years before the British formally acknowledged the United States of America as an independent republic, and the system these guys created helped to turn the United States into the most powerful and influential country the world has ever seen in under 200 years versus thousands years old other economies out there. And hopefully it stays that way for decades to come. But even politically neutral magazines like The Economist really speaking out, not happy with this situation. This is their latest cover with the headline, "No way to run a country." And even though Biden says he's not going anywhere, still thinks he's got another 4.5 years left in him. Betting markets beg to differ, still pegging Kamala Harris, the Democratic frontrunner, 17% odds she'll take out the election in November. Trump's still head and shoulders well out in front. And just interesting, looking at some stats, the S&P average returns for US presidential cycle scenarios, going all the way back to 1872. Interesting, the best year for presidential election cycle return comes in a Democrat first term, like the one we're in now, averaging 10.6%. Also interesting is looking at a presidential cycle scenario when we go from one political party to the next. What's relevant for now and the way we're looking, we're going to go from Democrat to Republican. Looking back in history, that gives us the best full-term average returns for stocks, up 43% when the White House switches from Democrat to Republican. So it looks like there's a bit of a power struggle going on in the Democratic Party. In my opinion, I think it will end up likely hurting their chances, because I think after the debate, a lot of people have given up on Biden. It's obvious to see he's too old for the world's most important job. Whereas if they got someone new and fresh in there, there would likely be a honeymoon period for a couple of months, carry them through to the election. Mainstream media would likely throw them a big party, talk them up, which is a really hard position for them to do right now with Biden. In fact, some of them even turn in against him. So once again, this diabolical election year continues, and let's all hope in 2028 we see some better candidate, because America really does deserve better. Alright, moving on from the presidential race to Tesla, on a really strong rip at the moment, coming back from nowhere, surprising a lot of people. There's a couple of reasons for that. They did beat on their latest deliveries. We also got some positive news out of China. They've been added to a government procurement list, meaning Chinese public organizations can use Tesla EVs, and this is a big part of the long-term bullish thesis for Tesla. And what really kicked it off the last couple of years was that they're a real player in China, a huge growing market with a lot of potential, and that definitely helps their valuation. Also got Dan Ives now saying Tesla could be potentially the most undervalued AI play in the market, with a historical robo-taxi day ahead for Musk and Tesla on August 8, where I'll talk more about FSD and the autonomous future. There's a look at a 4-year chart of their quarterly deliveries. Can still easily argue it's in an uptrend, close to all-time highs, and what momentum they've had. Just back in 2020, they weren't even delivering 100,000 units a quarter. Here we are just 4 years later, almost up 5x, approaching 500,000 deliveries a quarter. And once again, the shorts, for which there are plenty, are losing a lot of money. In fact, $3.5 billion just after the second quarter delivery beat last week alone. What's also funny is for a guy who claims to be one of the biggest climate change proponents in the world, and speaking up how the world needs clean energy, just so happens to be short the world's biggest clean energy company, Tesla, and said Musk has been mean towards him because of his short position in the stock. And being short the stock, he wants it to go down. ideally to zero, like every short seller does. Wants to kill what's arguably one of America's greatest ever companies, while still apparently wanting a clean energy future. And we just heard a couple of days ago from Elon Musk on his social media network, once Tesla fully solves autonomy and has Optimus in volume production, anyone still holding a short position will be obliterated, even Gates. And the bears must be certainly feeling the pain of late. Stock's gone right back into momentum mode and is up almost 40% just in the last 2 weeks. And like my regular viewers have always heard me say, you don't ever want to short Tesla because it has a tendency to do stuff like this. Moving on commodities, we've still got oil holding up there above $80 a barrel. Hasn't done so much as a pullback for weeks now. Really persistent price action. Seen supply pull back a little bit, but I still think the market's a little bit worried about the Middle East situation. We've also got the Hurricane Beryl barreling towards Texas, set to make landfall on Monday. However, I think it may arrive as a level 2 storm, which hopefully isn't too bad in the end. However, it could still affect the crude oil market. A lot of production around there, and for now, they're just kind of sitting up there below $84 a barrel. What's doing a lot better today? Gold and silver. Silver's actually the best performing global asset year to date, even better than stocks as precious metals. Come back into the spotlight now with bond yields pulling back. The market pricing in some Fed cuts. That's good for gold as it competes for investors' money. And you'd be surprised to know that there's been net outflows out of gold these last couple of years. However, investors could be starting to come back. Just looking at the 4-week moving average creeping back up into gold funds, and nothing changes people's mind like price action, and we're getting some good technical moves coming out of gold. Respected that support zone just above 2,300 an ounce, and here we are pressing up again today on volume back towards all-time highs around 24.50 an ounce. And there's the gold mining ETF GDX pressing back up as well. You may have seen Bitcoin take a heavy slide over Independence Day, and apparently that's been attributed to Mt. Gox exchange that was hacked over a decade ago, are finally selling their Bitcoin to repay back customers. However, they only had $9 billion to sell, but that somehow translated into over $170 billion wiped off the market. Because just like Tesla, when Bitcoin gets moving, it quite often does so sharply, going further for longer than what most people think. However, we did have a big buy the dip price action. There's the 1-hour chart. Quickly found support, a bit above 53,000 a coin, and just bumped back up to 56,000. However, I think it's fair to say the short-term trend is still down. Had a really soft bounce off that support zone just above 60,000 and then just fell over again. There's a look at a long-term monthly chart of Bitcoin. Kind of hard what to make of it here. Is it in a new secular bull market, or is this some sort of triple top? Say the next big support would be around 50,000 a coin, which it may just come down and test over the coming weeks. Would really need to defend that area if it's going to go on for a new secular bull market. And just to get you quickly prepped for next week, biggest one will be Thursday, Consumer Price Index, CPI inflation data. Then we've got PPIs and sentiment survey come Friday. We're also just getting into the start of Q2 earnings season. There's a look at next week, what's due out. However, it's usually officially kicked off on the first Friday by the big banks, JP Morgan, Wells, BlackRock and Citigroup. As usual, we'll be taking a look at their results, market reactions. Then we really get into the thick of it once we move later on into the month. And as always, the numbers and guidance can have a big impact on the market. But so far, there is plenty of earnings momentum out there, and Wall Street analysts are expecting more of the same. There's the Fear and Greed Index, still neutral at 54, thanks to that soft market breadth really holding it back. There's a look at the market's expectations of inflation, looking at the spread of inflation-adjusted treasuries, still on a bit of a downtrend here. Bit of a pick back up in copper versus gold, discretionary versus staples, been on a strong run the last 2 weeks, and growth sectors versus defensive sectors holding this breakout the last couple of days as well. And there's a look at the heavily traded Brazilian stock ETF that I covered on Wednesday's daily market review, EWZ. Put in another good day there today on volume. Typically what you'll see around market bottoms is the price will stall out and it'll kind of just grind on a lot of volume. That's signs of accumulation. You can see my reversal signals firing off down there as well. Good bullish divergence on my DSI. A lot of institutional buying and accumulation. And here we are, almost kissing the 50-day VWAP. Also having a good day, South Korea, ETF EWY. Breaking out to a new yearly high, and not too far off highs is Singapore stocks as well, still with a healthy dividend yield. 4.5%. For reference, the S&P 500 has a dividend yield of 1.2%. Let's look at Chinese stocks still holding ground, going into their big official state meeting on the 15th of this month. We could hear some big new economic reforms and stimulus. May get a good market reaction out of that. We'll just wait and see. There's a look at my AI favorite and my first stock pick that I hold. Palantir, having a good day, up 5.3%. Closing at a new yearly high. However, it was still a little shy, just by 25 cents of making a new actual high today from back on the 7th of March. However, it's good price action. Trend strength's gone back to blue. Looks like we're getting some momentum in the stock. And like I said, I'm excited to share what stock pick number 5 is going to be with paid members this Sunday morning, 8 a.m. New York time. Stay on the lookout for that. And a little bit of a pullback for the big banks today. Like I said, we go into their earnings next Friday. They have had pretty good run of late as well. Alright guys, that's the last daily market review for this week. Thanks very much for tuning in with me, and a huge welcome to all my new members of my Stock Pick service and $1 Million Challenge. Really excited to embark on this journey with you guys, and I'm going to be sharing everything with you, both the ups and the downs, and how I'll be approaching each market environment and managing the portfolio going forward. Should be quite the ride. Anybody else interested in jumping on board? Click the link below this video. Head on over to my website, clickcapital.io, and take advantage of the 40% discount before it expires. Other than that, have a great weekend. I'll be back on Monday night with another daily market review for you guys. Cheers.